This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, welcome back to Invest Like a Pro. This is Joe Rabil. What I'm going to do in today's video is discuss how to avoid getting chopped up in an environment that it really isn't trending. It's actually, there's two parts to this video. One is to show you pretty much how to avoid. Now, what might happen to you is that you could take a loss at the beginning, but once you do that, after that period, there are ways to avoid taking multiple losses over and over again when you're in a trading range, and I'm going to show you how to avoid that. The second thing is how to actually take advantage of a range when you know that you're in it. So let's go ahead and get into this. I think this can be helpful, especially in the type of period we were just in. So this is the S&P hourly chart working sideways here, and we can see that we made a move to the upside and then came down, found support. There's pretty decent support down underneath, and there was pretty strong resistance overhead. If we go to the 10-minute chart, what I'm trying to show you is here, and let's go back to the original setup here. So once this dropped down from this level, we had this move to the downside, you can see on the hourly, really violent to the upside. We could take this first trade. This first trade was a zero line reversal with low ADX, and we can say, you know what, I mean, we've got a pretty good looking pattern here the way this is setting up. We have failed here and we have failed here, but we haven't really taken a signal that could break through there. So we could do this as a probe trade. You could do this one time, right? I mean, you could give it a shot. Now, most of the time, I'm going to recommend not doing that. I'm going to say if we're too close to this resistance level to make money, then we don't want to take it. But the way this is set up, you could have actually gotten in pretty early here, used a tighter stop, and by the time we hit resistance, you would have been at a break even potentially, or maybe even taking a small profit and going to a break even and then seeing if it wants to break through. This is called a probe trade, probing to see whether this wants to break out based on what we're seeing in the lower time frame. Now, on the higher time frame, we had kind of a spike low reversal with a gap up and then a consolidation. The moving average was turning up. I mean, look, this wasn't a perfect setup, but you could argue they have a pinch play crossing the zero line on this time frame, and then you have a zero line reversal with low ADX breaking the downtrend on this time frame. If you want to do that, you can do that. In most cases, now I have this as red, and the reason why it's red meaning not a good trade, is because it was a little too close. But in reality, the first time you're in a range, you can give that a shot. Once that has happened and failed, you can't continue to take trades too close to this resistance level. You can't keep taking probe trades over and over again if there's not enough room to get in and get out. Okay, so let's move on to the next setup. So look at this next setup. We had a move where it really, I mean, yes, this was a really nice pinch play crossing back above the zero line, but and maybe you could have gotten in and gotten out, but you had to do it essentially 10-minute bar, and you had to do it right at the end of the day. I mean, it really doesn't make any sense. If you're doing day trade, you're not going to do it right at the end of the day. It has the gap up, and then it just reverses back down. Now, I did not point this out, but I do want to show this. So look at what happened on the way down. You see this set up to the downside. We had a pinch play crossing to the downside. We got red DI starting to show up. I mean, if you're going to play this, you have to understand that we don't have very much room to play. I would avoid these trades. I would simply avoid these. Once I know I've failed here and failed here, I know I'm in too tight of a range to really make any serious money, and I don't want to put in that much work to try and get in and get out, get in and get out, and try and get in at the bottom, get out at the top, and that kind of thing. What I'm going to do is wait for, and it'll show up in a low ADX condition, but what I'm really going to wait for is a clear breakout and then look to play the next pullback. Now, if the breakout is buyable, you can do that. In this case, it really wasn't. We needed to wait for a higher pivot low. But I don't want you taking the same trade over and over again in a range where you're trying to get in here. Now, as we move forward, you can see that we did form a 1, 2, 3. You see this? Hold on a sec. we had a 1 breaking the downtrend line. We moved up, pulled back, and look at this pinch play here. Look at what's going on with the ADX. Look at the volume action. And that's taking a place. This triggered at 10 o'clock in the morning, 10:30 in the morning. And look at how much room we have if we're getting in off the pinch play to get in on a move to the upside, right? When we can get in before we hit any kind of real significant resistance. I'm willing to play this, but I understand what I'm doing. All right. I'm not going to sit here and get long here on this pinch play up here, knowing that I have to get in and get out so quickly. And I know the red line is up here, and if you did the math, maybe you can pull it off. But look, when you're playing really tight like that, you can't assume that you're going to get the red line, right? I mean, so we got to be really careful about taking trades that are close to resistance. Now, this could happen on a daily chart with weekly resistance. You always want to put in where, if you're in a range on the higher time frame and we're trying to trade off the lower time frame, you got to be extra careful about playing in the upper end of the range. We don't want to take these trades over and over again. The way you can save yourself is the moment you've taken one loss. You're willing to take one loss as a probe trade. You can't keep doing it over and over again, saying, oh, this looks like it's going to break out. It's not going to break out, or if it is, we're going to let it break out and then play the next pullback. Now, here's another example later on where we had another 1, 2, 3. We broke the downtrend on this gap, came back down, and when we had a higher pivot low form, essentially the 2 being formed as it's crossing back above the moving averages. And MACD is coming back up again after making basically a double bottom. So I don't have a problem taking that because I have enough room before I get into the resistance. But I'm not taking the 3. I don't want to take this trade where I have more confirmation. We get a little pinch develop here with green DI improving. I'm not doing that because I've already taken a loss in the same price area. Once you've taken a loss at 412 and a half to 413, you don't keep taking it at the same level until we break out of the range. All right. So you have to look at this and say, do I have enough room? And if I'm buying in the same area, 412.50 to 413, I know I don't have enough room. I can't take that trade. Now, what ends up happening is we get a move where we finally break out. Look at the rising, look at the strong MACD condition, look at the improving DI, and look at how the ADX is rising here. And then we get the higher pivot low here, which turns into a pullback trade here, and a really strong reading to the upside. There is no overrun here necessarily in terms of getting back below the 0 line because we're so far above the 0 line. But when we run through this, we don't take the first trade, right? We let it consolidate. But then look at how this emerged out of here. We could definitely take this trade emerging back up because it's tested this area and the 18 never rolled over. We still have a rising 40 underneath. This trade is really the entry into this trade, and we've got confirmation of a low ADX breakout. So this is how you avoid chop, right? Once you take a single trade, you can take one loss, all right? From that point on, you don't take a trade over and over again if it's too close to the upper end of the range. Now, it's a little bit different. If you're playing for hedging, like if you're hedging your positions, it might be a little bit different. You might be willing to go short inside the range in here because you're trying to protect against losses in your long portfolio. That to me is a little bit different. I'm talking about doing a speculative trade, trying to make money, especially in a scenario like this where we've got such a tight range. You got to be very, very careful. All right. Hope this helps you understand how to avoid the chop. The easy way to do that is if we have a low ADX condition on the higher time frame, you just avoid it until we break out. All right. Hopefully this helps. Let me know if you have any questions. Thanks.